Hi, good morning. My name is Kaysian Gordon from Kaysian Financial Planning. And today I want to ask you the question, is it possible to time the markets? So as this topic has come up a few times for me recently, I wanted to stop and talk about it. Is it possible to time the market, the stock market, that is? In conversation that I've had with one of my dear clients who's already in retirement, she asked the question, as markets have been down so much and I've lost money, would you say it's time to sell? And this was a very, very good question. And I'm glad she knows that she can ask me anything. I paused before I responded as I wanted her to know that I understood her situation and why she was asking. And my sincere response was never, and gave her a more detailed response. The day we happened to be having that conversation also turned out to be one of the best positive days in more than 2 years in the stock market. And I have been in the industry for many years, over 20 actually, but I'm still only 25. And I know that while it may be uncomfortable to watch the decline in the markets and your investments, I also understand that if you were appropriately allocated prior to the market decline, then wholesale changes should not be made in your portfolio at that time. While there may be opportunities to tweak a portfolio during down markets, selling everything and sitting in cash is almost never the right idea, unless you needed the cash in the first place and the money should not have been invested in the markets. So I walked her through the way we had both allocated her short-term needs, which we had planned for, and were in cash and money market funds and not subject to the stock markets and the movements. And then the monies that were allocated for longer term growth, which was invested based on her specific appetite for risk. I always advise clients that in order to invest, they need to have a longer term time horizon. If monies are needed in the very short term, investing is not wise, as we cannot time what the markets will do in the very near term. But we do know that over time, based on history, the markets will come out ahead. So I'll say when I worked at the larger firm that I did, and we went through the recession of 2008, there were some things that became apparent in the years following. And I'm talking about 3, 4, 5 years later. For the clients who withdrew their investments during the turmoil, they were almost unwilling to get back into the markets. And so while the markets ultimately recovered and had their best run for almost 11 years until the pandemic of 2020, they missed the early years as they were waiting for a decline to buy, which never really happened. For the clients who withdrew part of their money, their returns were far less than it would have been had they fully stayed in. They didn't quite know when to get back in either. And for the clients who stayed in and rode the declines and did not try to time the market, they fared the best. There are numerous studies out there that the investors who remain invested over the long term without attempting to time the markets usually do better. And having a financial advisor who understands your overall goals for your life will be hugely beneficial when the markets are going through their normal cycles, and especially one who has experienced declines before. I know that while we have not necessarily seen a whole lot of down markets in the last 11, 12, 13 years, that this is a part of investing. And the advisor will also be able to remind you of what you shared your goals were, so that you do not make impulse decisions that could be potentially harmful for your life. It's almost like having an accountability partner to help to guide the way you're investing and also your behaviors in the process. Again, my name is Kaysian Gordon at Kaysian Financial Planning, and I look forward to sharing with you in the next video. Talk to you soon. Bye.